Welcome, everyone, and happy National Apprenticeship Week. I am delighted to be joined and welcome back Funmi Olufunwa, who is a personal and family finance expert. And today, Funmi is running a session on mastering money, essential financial skills for life. So without further ado, I'm going to pass on to Funmi to start the session.
Brilliant. Thank you so much. Right. I'm just going to share my slides. And if anyone can just tell me, confirm that they can see my opening slide, that would be great. Can you see it?
Yes, they can.
Brilliant. Okay. So thank you. Yes, it's my third time coming back actually to Kaplan. So thank you so much, Poppy, for having me back and for everybody for joining today. So today's session, we're going to kind of try and cover three key areas in relation to money and finance. I'm going to try and keep it as interactive as possible. I know there's quite a lot of people on the call. If you're eating your lunch, that's absolutely fine. But if you want to get involved, we've got a chat function. So if you've got any questions or comments or observations, if you put them in the chat, and what we'll do is at the end of the session, I'll go through the chat and then I'll answer anything that I haven't already been able to pick up on. So who am I? Be helpful for you guys to know. So as Poppy said, I'm Funmi Olufunwa and I am the founder of a financial education business called Hoops Finance. And previous to running Hoops Finance, I was a finance lawyer for nearly 20 years. I'm also a certified financial coach and I'm a qualified mortgage advisor. So throughout my career, I have talked a lot about money. And it's something that I believe that we don't talk enough about in our lives and society. And there are also quite large gaps in terms of knowledge and also confidence. So that's what I aim to do via Hoops Finance. And that's what I'm hoping when after this session, you'll have learned a few more things than at the start of the session. So we're going to cover three main areas today. The first one is decoding your payslip. Your payslip is so, so important. And so many people, in fact, I'm going to ask a question in a second, but so many people maybe don't check it very often or don't check it at all. But when you're working, when you're employed, that's your main source of income. So it's really important to know that what you're being paid is correct. So we're going to go through a payslip and on all the different parts of it so that you can then look at your own and hopefully you will have brought your own and work out if there's anything that you need to ask any questions on. That's section one. Section two is about managing your money in 2025. So I'm going to give some top hints and tips of how you can manage your money. And then section three is on boosting your income. So, we would all probably like a little bit more income. So we're just going to cover some ideas, again, some hints and tips of what we can do there. So first question then, what percentage of people do you think always check their payslip? Do you think it's 86%? Do you think it's 57%? Or do you think it's 13%? Put it in the chat so we can see.
Most people are going for 13.
Okay. Okay, interesting. It's actually a bit higher than that. It's actually 57% of people. So you guys were doing the nation down there. So 15% of people, 57% of people always check their payslip. That obviously means that there's 43% of people that don't always check their payslip. So it's really, really important, as I said, for us to make sure that our payslips are correct. I saw a stat recently that 5.8 billion pounds of tax is overpaid to the government because people are on the wrong tax code and they don't know they're on the wrong tax code or they don't check their payslip so they don't see that they're on the wrong tax code. So that's 5.8 billion pounds that could be in our pockets that isn't. So one of the things that's on your payslip is your tax code, and we're going to go through where that is, what it is, and how you find out what you need to do if you find out that it's wrong. Okay, so a payslip. So hopefully you can all see this. This is actually a real payslip. And what I'm going to do is I'm going to talk you through the different areas of it so that you can then, hopefully if you've got yours with you, you can have a look and just sort of see and make sure that you understand yours. Whenever I talk about payslips, I always talk about it like a bit like a story. So we've got a beginning, a middle, and an end. Now, the beginning bit is your what we sometimes call your gross pay. So that's the total amount that your employer would start off by giving to you. And so you can see that for this person's payslip, their gross pay is £3,166 and 67 pence. So that's the first bit. Then the second bit, the middle bit, is the deduction. So things that get taken out of that gross pay. So as you can see for this person here, we've got PAYE tax, and that stands for pay as you earn tax, often called income tax. So you might see PAYE tax on your payslip, you might see income tax, you might just see tax, but it's all talking about the same thing. National insurance. So that's the second employment tax that we pay. Often not spoken about that much, actually, but it is a tax. It's something that we pay. And it's a deduction, so money that's going to come out from the original amount that the employer is giving us. And then this person contributes into a pension as well. So at the moment in the UK, if you earn £10,000 or more and you're 22 or older, you get automatically enrolled into a workplace pension scheme. And you have to contribute a certain amount, and then your employer has to contribute a certain amount. Now, a lot of employers will actually allow you, will actually pay in more if you want to contribute more. Pensions are quite a tax efficient way of saving for your future. The reason being that ordinarily, as you can see on this payslip, this person pays tax. But when they contribute into their pension, the money that they are paying into their pension, they actually get tax back on that. So it's a really, like I said, a tax efficient way of saving up for your future. So here we've got tax, national insurance, and pension, and those are the deductions that are coming out of this person's payslip. You might see other ones on your payslip. So you might have schemes with your employer where you pay for benefits. And so you might see those as deductions on your payslip as well. So don't worry if you see anything that's not one of these three things, but it's just worth making sure that you understand what it is and that it should actually be a deduction on your payslip. That's the middle bit. And then the end bit, as you can see here, is what we've got the net pay. So for this person, it's £2,439 and 51 pence. And for most people, that's probably the most important figure because that's the amount of money that's going to land in your bank account. Now, I mentioned that I was a mortgage advisor. So one of the things that I used to have to do was check people's pay slips. And you'd be surprised how many people's pay slips are actually wrong. So things like the net pay amount, that final amount, not actually matching what goes into their bank account. So something's gone wrong somewhere. Often, unintentional, but it's just really important to make sure that we're checking these things regularly. So we've got our gross pay, our beginning bit, our deductions, our tax, our national insurance, and our pension, and then our net pay, which is kind of the end of the story. Now, I mentioned tax codes, didn't I? So you can see that for this person, their tax code is 1088L. Now, what that means is for this person, they can earn £10,880 tax-free. And then once they start to earn over that amount, that's when they'll start to pay tax. And I'm going to just got something here to make that a little bit clear. So our standard tax code, the starting point is actually 1257L. So if you've got your payslip in front of you, have a look and see what your tax code is. Is it 1257L? And I'll explain a little bit about that number. So in the UK, when we earn income, we can earn some of it tax-free, and then we start to pay tax. Now, the starting point for most people are starting to pay tax is when they start to earn over £12,570. So it's the 1257. So you take away the letter and you put a zero on the end. And that's what we call the personal allowance, the amount that you can earn tax-free. And then once you start to earn over that, that's the point at which you start to pay tax. So if you've got a tax code of 1257L, great, you can earn 12,570 before you pay tax. The payslip I was showing you before, the tax code was 1088L. And that means this person can earn £10,880 before they pay tax. So they're starting to pay tax sooner. And then the other example I've got here below is if your tax code is 737 and you'd be able to earn £7,370. And then anything over that, you'd be paying tax on. So it's really important to understand if your tax code is different to the 1257L, why is it different? Now, it could be different because maybe you paid too little tax last year and they're trying to recoup that tax. So instead of saying you underpaid tax by £2,000, we'd like that £2,000 back now. Please pay us £2,000. You might say, well, it's quite a lot of money to give you in one go. So I would prefer it if you could take it gradually. So what the government can do is adjust your tax code and so that you start to pay tax sooner. So that could very well be what's happened in this particular situation. It can also go the other way though. So your tax code could be something higher. So let's say your tax code was 1500L. That would mean that you can earn £15,000 before you start paying tax. So you start paying tax a little bit later. Now, again, you want to make sure that that's correct, and that may well be correct, but you've got to make sure that it is, because what you don't want to happen is that in a couple of years' time, and I know people this has happened to, years down the line, one person 4 years later, they got approached by the government who said, you underpaid tax 4 years ago, and we'd now like that back. So you need to make sure that you know what your tax code is, and if it's different to the 1257L, you understand why. So then just going back to the payslip again. So we've covered gross pay, deductions, net pay, and the tax code. Up here, I've scribbled out a little bit because it is a live, a real payslip. I've scribbled out so you can't see all of it, but your national insurance number is on your payslip. Really, really important again to make sure that this is correct. I do know of instances where someone's national insurance number got swapped with somebody else accidentally. It's really important that the right information about your finances and tax is attached to you as a person. Your national insurance number is unique to you. So again, get into the habit of having a look at your payslip, making sure that the numbers kind of seem okay, but also that the national insurance number is yours and it doesn't change. And then a few other bits that I'll just pick up on that might be interesting to you. Typically, your payslip will tell you how you're being paid. So you can see towards the bottom it says payment method, and it says backs. So that's basically it's automatically being paid into your bank account. The payment period monthly. So most people probably get paid monthly, but some people do get paid weekly or every other week. And then there's a lot of information about how much tax you've paid in total, and also how much tax you've paid in relation to this particular pay slip. So lots of information in here for you. I'm going to just touch on tax a little bit more because I do get quite a lot of questions about this. So I mentioned the personal allowance of 12,570. Once you start to earn over that, if your tax code is 1257L, you then become what's called a basic rate taxpayer. So if you earn anything between 12,570 and 50,270, you pay 20% income tax. But that 20% is only on the bit above the 12,570. So you still got that amount of money that you can earn tax-free. And then if you earn between 50,270 and 125,140, not the easiest, not the most straightforward ways in which they've done the band, but if you start to earn between those amounts, then you'll be paying 40% income tax. You'll be a higher rate taxpayer. But there's a bit of a quirk here. So once you start to earn over £100,000, you start to lose that personal allowance. So the government essentially thinks you're earning quite a significant sum of money. So why should we still be giving you a tax-free bit? So they start to gradually reduce that tax-free bit as you earn between £100,000 and all the way up to £125,000, 140. And then once you've got to that top figure of 125,140, you don't have a personal allowance at all. So everything that you earn will be taxed, the first bit at 20%, and so on and so on. And then if you're the very top rate of earners, if you're earning over 125,000, 140, then you'll be paying 45% income tax. Now, the tax bands I've talked about are for everywhere in the UK apart from Scotland. So I don't know if we've got any people from Scotland that have joined the call, but if we do, then you have slightly different income tax bands. I'm not going to go through all of these, but what I would say is if you just go to gov.uk and type in income tax bands, you'll find all of this information there. And then I mentioned national insurance as well, which I'm just going to touch on briefly. So as well as income tax, you pay national insurance. National insurance is really, really important because when you pay it, you get something called national insurance credits, and that counts towards your state pension entitlement. So there are two main types of pension. There's effectively three. There's your state pension, which the government will give you, an income that the government will give you if you've earned enough national insurance credits. There's your workplace pension that your employer will set up for you and automatically enroll you into it if you qualify. And then you can also set up your own pension. So, for example, somebody who was self-employed, who doesn't have an employer, you could also set up your own pension as well. But national insurance credits, really, really important to make sure that you've got those. And you can actually check your national insurance record. So if you have an HMRC account, which is really easy to set up, and I'd actually suggest that everybody sets one up because it means that you can just check this stuff really easily. And they've also got an app. But if you set up an account with them, you can see what years you've been paying national insurance and just making sure that you've got a full record. Because what you don't want to happen is that you get close to retirement age, which probably for most of you guys seems very, very far away. What you don't want to happen is that you get to close to retirement age and actually you don't have enough years of national insurance credits. So yeah, you can check how many you've got, and if anything looks wrong, so if you think, well, I was working that year, but it doesn't show that I was working, then obviously question it. Okay, so that's decoding your payslip. So the next thing I wanted to talk about was managing your money in 2025. So I speak to a lot of people and they want to know, like, what's the best way to manage their money? What's the best way to save? What's the best way to use credit? Should they be using credit at all? Lots and lots of questions about managing money for lots of different reasons. People have different goals. We're all very different. We all have different goals, things that we want to achieve. And for most things, money will help us get there or help us get there faster. So I always say to people, very sort of at the outset of anything, really, really important to know your numbers. And by that, what I mean is what's coming in and what's going out. So we've just talked about pay slips and income and understanding that all of that is correct. That's kind of one half of the story. The other half is, okay, what's going out? Now, this isn't going to be, I'm not going to start talking to you about don't have any fun, don't buy any coffees, don't, eat out, etc., because that's not going to be a very fun and exciting life. But we do need to understand how much we are spending, and effectively how much does it cost to be you? Because ideally what we want is the money that's coming in to be more than the money that's going out. We want to try and grow that bit in the middle, that's sort of the difference between the two, and then use that to put towards our goals. So I would ask, my question then is like how well do you think how much of a grasp do you think you have of your spending? Do you think you kind of like know quite well how much you spend on certain things, or is it kind of just a bit up in the air? Let me know in the chat. Okay, used to be up in the air, but a bit better now. Interesting. What do you think the reason is that it got a bit better? Partial grasp surprises me every month how much I have spent. Yeah, to be quite honest, Emma, you and me both. I think what we've got to be aware of is that we are kind of living our own lives, but there is this wider economic environment that we are sort of living within. We can control what we can control, but some things are actually outside of our control. And, we've had high inflation over the past few years. Inflation is coming down now, but the cost and the price of things has gone up. So I often speak to people who say, "Oh, I find it really difficult to stick to my budget." And I can see a couple of people here have sort of mentioned something along those lines. Um, and I then say, well, okay, number one, is your budget realistic? Because you could say, I want to spend £50 a week on food, but food prices have gone, and you could have said that a few years ago, for example, but food prices have increased massively over the last few years. So if you're still trying to stick to this very rigid um, budgeted amount that you set out a couple of years ago, you are going to struggle to stick to it because things are different now. We're operating in a very different time. So when it comes to budgeting, the first thing I say is it realistic? Are you actually looking at how much things actually cost? Or are you just picking a figure out of the air and saying, I'm going to spend this? I'm going to spend, like I said, £50 on food, but actually every week your food bill's £100 and that's just what it is. So let's have a look at some more responses. Yours varies, you've got a spreadsheet, but you're still shocked. I know what I spend on, but I feel like I should be able to save and I can't seem to. Very, very common. I use a budget planner spreadsheet. Set myself a budget, but don't always stick to it. Yeah, I mean, everything that you're saying, everything that you're putting in the chat is really, really common. It is hard. It's hard to follow and think a lot of the time things are outside of our control. But the fact that you're looking at it and you're making a start is a really, really positive step. Like I said, I would just make sure that you're being realistic in terms of what you've done as a budget. And then in terms of how you do it, I can see somebody mentioned, I think I saw somebody mention some Monzo pops. I saw somebody mention a spreadsheet. What I would say is there are lots of things out there to help us try and budget, try and help us try and manage our money better. And they won't all work for you. I'm also a spreadsheet person. Lots of people love apps. I don't love an app. Very boring. I like a spreadsheet. Sometimes I like a pen and paper. I would always say, do what works for you. Try something for a bit just to see how you get on with it. If it doesn't work, maybe try something else. But there's absolutely nothing wrong with good old pen and paper. Let's see what other comments we have. Yeah, cost of living is crazy. It's a lot. It's a lot for a lot of people. I totally hear that. And I guess, like I said, all we can really do is try and control what we can control. But I don't want this to be really, really negative. What I want us to remember is that we do have an element of control, and we should be trying to focus what we spend our money on things that bring us joy, things that we like doing. So I always suggest this as an exercise. I think we can have these really great ideas about what we want to do with our money, but our statements don't lie. So go back, we're in February now. Yeah, okay. So I always say, I'm just checking because December is a bit of a crazy, crazy month. So I always tell people kind of ignore your December statement a little bit because that's not real you. Real you is probably February sort of onwards. So have a look at your last few weeks of in your statement, and that will really tell you kind of like what you're actually spending money on. And when you look at it, do you think I'm pleased I spent money on that, or you think, oh, that was a bit of a waste? Because when you can identify things that you're like, oh, I could have just done without that, I don't really need that, those are the things that you can start trying to, remove from your day to day. A lot of people are paying for subscriptions that maybe they set up a while ago for something that they were really active in using, and now they don't use it so much. Or maybe they forgot. Maybe it was like a free trial or a reduced rate for a trial for something, and you've just forgotten. I really believe that every single person could probably find one thing, at least one thing in their statement that they don't need, they don't want, they can do without, and they can stop spending money on. So when it does feel like things are quite tight, as it will feel for many of us, or it does feel for many of us, I think it's looking at the things that you actually want to spend your money on and cutting out everything else, or reducing the cost of everything else as far as possible. And then I think if you have a goal in particular, so you might have a goal of something that you want to buy, um, something you want to buy, something you want to do, a course, go on holiday, whatever it is. I always think the easiest thing to do is you've probably all heard of the SMART framework. Try and get really specific about what it is when you want to do it, and then work backwards. So if you need to have, say, I don't know, £1,000 by the end of the year, just about £100 a month, for example. So once you know that, it's like, right, how can I find £100 a month each year? I'm sorry, each month. Is it increasing my income? Is it reducing my expenses? Is it doing something else? Just trying to be a bit clearer about how you're managing your money. So it's a bit less, oh, it just kind of, money just kind of happens, but you are proactively and very actively managing your money where it's going so that you can reach those goals. And then I just wanted to put a little comment. I want to talk a little bit about accounts. I don't know if you remember a couple of weeks ago, there was a very big, Barclays had a massive IT issue. And I think it really emphasized, number one, how much we rely on digital, like being, spending on contactless cards and things like that, but also how risky it is potentially to have all of our finances within one institution. So my partner, he banks with Barclays. He has three accounts: a credit card with Barclays, a current account, and a savings account. So he was a little bit screwed on that day because his cards wouldn't work, and he was going through each card and it wouldn't work, it wouldn't work. I have, I'm less loyal. I'm much less loyal. I'm not with Barclays at all. I'm with about three or four. I've got a couple of current accounts with different providers, and I've got three credit cards um with different organizations. So I was a little bit, or it was much better for me because number one, I wasn't affected by the Barclays thing. But I guess the point I'm trying to make is that don't put all of your eggs in one basket. I think it's always really handy to have one main account, but I think it's also sensible to have another account just in case anything happens. And also to have some cash as well. I know many places are sort of saying no to cash now, or they're not very, open to taking it, but some places still are. So it's always still worth having cash as well. And then I just put finally here credit. There are a lot of people that are very anti-credit. I am not one of them. I believe that credit has its place, and people can use credit. If you can use credit and you can manage it well, you're not getting into sort of unmanageable debt. Then if that's what you feel is the best option for you in a particular situation, then sort of you do you, I guess. But it's making sure that you understand how it works. So I have a lot of people that I speak to who maybe didn't really get how, for example, a balance transfer works. So they got themselves into a bit of a pickle. So if you are using credit, just make sure that you're using it responsibly. Make sure that you can afford to repay what you've borrowed. And again, you've got this plan for paying it off. And then the money timeline, which I think is actually a really good thing to do. Often we're kind of living in the here and now and just sort of taking things day by day. But when it comes to money, I think it really is a good idea to plan. So what you could do are things like looking a few months ahead, what are the key things that are coming up over the next few months. And that could be, bills going up or starting to pay for things, or let's think, what else could it be? Insurance is coming to an end, so you're having to renew, and that renewal might mean that they go up in price. Just try and have a good sense about what things are coming up for you over the next few months, and then try and plan for them. So it's not a case of, oh gosh, something's happening, and you're scrambling around trying to find the money for it. So those kind of would be my top tips for kind of managing your money in 2025. And then finally, boost. So how to boost your income. I'd love to know, has anybody, if you're open to sharing, has anybody got a side hustle or find ways that they boost their income outside of their work, or their main work, sorry? Because I think when we're in the pandemic, a lot of people, I think people had more time on their hands, and also people maybe sort of felt actually relying on one income is potentially quite a risky thing to do. So we've seen a massive increase in people actually having side hustles, setting up side businesses. So I can see a few people here. I do affiliate marketing through TikTok, part-time reception, yeah, vintage, yeah, all of these things. Brilliant. So I guess the point I'm trying to make is there are ways that we can think of and things that we can do to try and boost our income. Having said that, though, one thing that I am just very conscious of is what I would call hustle culture. So this whole, you've got to be, every single minute you're awake, what are the different ways that you can make money? And I really don't subscribe to that. I think that we also need time to rest. I put here, we're human beings, not human doings. So I think sometimes, like, we've got to always be doing something. I think resting is also something that we need to do. So if you have the ability, you've got the time, you've got the headspace to sort of pursue extra income streams, then absolutely, but don't do it to the expense of your sort of health and well-being. But I love these ideas that people have said. One very, very easy way to boost your income is to make sure that you're getting all of the entitlements that you are entitled to. So each year, in fact, I'm going to ask you to guess this. Each year, how many billions of state support, like government benefits and things like that, do you think goes unclaimed? So it's billions, but put a guess. I'm going to give you a bit of help. It's between 10 and 100. What do you think is the answer to that? We've got 65 billion, 55, 80, 50. Okay. Oh, Lucy, you were one out. It's 23 billion. 23 billion pounds a year goes unclaimed. And I think a lot of people think, well, I'm working, so I'm not going to be entitled to anything. But there are actually lots of benefits that you're entitled to. It could be because of your family status. It could be because of your health status. It could be because of your residential status. So, for example, a lot of councils do a single person's discount. Now, unfortunately, it's not 50% discount. It's usually about 25%, but it's still better than nothing. So the first thing I say to everybody is just check and make sure that there's no sort of state entitlements that you are due, but you're not getting. And also, actually, if anybody's a parent here, there's often lots of childcare related benefits that people are missing out on. Things like child benefits, tax-free childcare and funded hours. So there's a calculator that you can do on gov.uk. If you just go into Google, put gov.uk, put benefit calculator, and it'll ask you a series of questions, and then it will tell you what support you might be entitled to. How do they calculate this? Yep, absolutely. I completely agree, Ricardo. But unfortunately, people remain unaware. I mean, I don't know what their communication strategy is. to let everyone know. But yeah, it's a lot of money that people are missing out on. So that's the first thing I'd suggest doing. Do that benefits calculator to see if you're entitled to anything. And then if you're not, then some of the ideas that people have come up with today, things that you could potentially do to boost your income. One thing I would say though is I know that some employers have clauses within their contracts about you being able to work in other workplaces. So make sure you have a look at that, because I wouldn't want to suggest that anyone does anything that breaches their employment contract. But yeah, there's a lot of things that people can do, things that you can do from home. So I think I saw somebody who said Vinted, selling things. Often we kind of think maybe that nobody would want the things that we have, but people often do. So yeah, if your house or your home's feeling a bit cluttered and you're trying to find ways to make some extra income, that could be something really easy that you could start. But it can also extend to other jobs, and other things. So I'm just going to pause now, and see if anybody has got any questions. I'm just going to have a look through the chat and see if I've missed out on anything. I missed out on any questions, sorry.
You've covered everything for me.
Yeah, I think I've covered everything.
Yeah. Anybody got any other questions for Funmi?
Anything on the pay slip or the income tax bands? I was trying to, I think maybe I was trying to keep to time too diligently and I was a bit too quick. So if I rushed through any of that and anyone's got any questions, then pop them in the chat now. But also, in the top right hand corner, there's a QR code, and that will take you through to my contact. That's actually take you through to my Instagram page. And if you just send me a DM on there, then I can come back to you. So you might think of something after you've left. Oh, okay. I think we've got some questions now.
Yes, I think somebody just missed the very beginning and they joined slightly late. So I don't know if it's possible just to quickly recap what you said in the very beginning for me.
So I started off talking about pay slips. I'm not quite sure when you joined, T. Do you remember when you joined? And I'll know sort of what to recap on.
And I think just to avoid in duplication, just to let you know, the recordings will be sent out to everybody. So if you had missed like anything Funmi said, I think it'll be really good, wise for you to listen to the recording, and we will share the slides as well. So you probably get a better understanding, whereas Funmi might just recap now. But it was on payslips.
Yeah. So it was on payslip. So I talked about the importance of checking your pay slips, and I went through sort of the main components of your pay slips, then focused quite a bit on tax codes, because that's the one that causes people to overpay tax the most, to the tune of 5.8 billion. Yeah.
We do have a question regarding tax code. Could the tax code change if you're unpaid tax for the previous year or the current year?
Yeah, so that's one way that they can do it. So um, they'll let you know. Well, if you realize that something's wrong with your tax code and you go and you approach HMRC, they'll look into it. And then when they've decided, okay, yeah, there is something wrong, and maybe you paid too little tax, so we need to get that tax, we need to get that tax back from you. There's often an option. So it might be you just pay it back in full. So you owe £1,000, you can just pay £1,000 if you've got that. They may let you set up a payment plan, so you could pay in installments, or they might say, well, if we adjust your tax code, then we'll recover it that way. So there's different ways that they can do it. If you can't afford to pay it all in one go, they are obviously open to a payment arrangement. So if you do go and have a look and you spot something, you're like, oh no, it looks like I have been underpaying tax, please don't panic. They are once you can get through to them on the phone, they are very helpful, and they'll work with you to try and find a way to get it back that's not going to cause you any sort of financial detriment. Yeah.
Got another question. How do you find the best current accounts or saving accounts and credit cards? What would be your kind of strategy and the methodology behind that? How do they go about researching that?
So I think with current accounts, I'll take each one separately. I'll start with the easiest one. With savings accounts, I think about like what are you trying to get out of it? If you're sort of saving just because you know it's a good habit to get into, I would be looking at um what's the best interest rate I can get because you're trying to grow your money. Um and I would suggest looking at things like, is it easy access? So can you just get that money whenever you want it? Or is it locked away? And if you try and get it, then you're going to lose some interest or incur some sort of penalty. But typically, we have hundreds of billions of pounds that are sitting in really, really low interest paying accounts. Now, at the moment, we've got in the main sort of interest rate for the country, the Bank of England base rate, is now 4.5%. So if you have a savings account and it's paying you anything less than 4.5%, I'm very confident you can find something that pays you more. Because typically what tends to happen is a bank will entice you in with a really exciting and higher interest rate, and then it just starts to tail off and it just gets a bit lower. So they're different types. You've got a fixed interest rate, so that'll be fixed for a particular period of time, or you've got a variable, which basically means that the bank can just change it as and when. And some banks have not been great at increasing rates when they should. And it's historically the older traditional banks. If you look at the sort of new up and coming entrance to the market, often the digital banks, they often have much better interest rates for their savings products than your typical high street bank. I was working with a client once and they had a savings account that paid 1.4%. And we went and we looked at their provider and we looked at all of the accounts, other savings accounts their provider had. And there were lots of them and they were all paying more than 1.4%. So I always say there's two ways to do this. There's the lazy way, and that's where you just look and see if you're where you currently have your money, if there's another account that pays better. Often there is. Or if you want to put a little bit more effort into it, then go and look elsewhere. And that kind of, I mean, I said that's for savings, but I think that's kind of the same thing for most of these accounts. So if I talk now about current accounts, I would say look at what you need in a current account. Do you need something like an overdraft? If you do, what are the overdraft fees and charges? And is it an account is with an institution that's, if you're somebody that really likes apps, for example, you might want to choose a provider that's got a really good app versus a provider that hasn't got one that, where that app isn't so good or they don't even have an app. So great places to start are comparison websites. So places like moneysupermarket.com, they've got different sections for different types of products. And let's say you go to the current account section, it may ask you some questions and it will order the current accounts in the market based on sort of your preferences. So they're great places to start. So I think you said savings, current, and credit cards, I think.
Yeah.
You said. So again, with credit cards, it's quite similar. I would say, again, what do you want to use it for? Some people, if you're using it for day-to-day spending and you think you're going to be using it quite a lot, I know some people will put all of their spending on their credit card, pay it off in full because they're trying to maybe get some points or something. So if that's how you want to use your credit card, you want to try and earn points or cash back, look for a points or cash back card. You might be somebody who maybe wants to put some money onto a credit card, let's say like a 0% balance transfer card. If that's the sort of thing that you're looking for, you can again go onto a price comparison website, see which ones that are the cheapest, or maybe which, for that instance, which one has the longest balance transfer period so that you can pay it off over a longer period of time at a lower rate of interest or maybe at no interest. So that's something to look for as well. And then just the functionality of it really. But if I'm honest with you, and this is from someone who's worked, I've worked in financial services for a very long time. I sometimes think the simpler the better. I think some of these institutions, they bring out these products and there's lots of whizzy new features, but do we really need that? Do we want something that's just very simple that we know how to use, we don't have to take too much time using? So I think sometimes simplicity can be quite useful as well.
Thanks, Funmi. And Zach and Jay have given some useful tips on the chat as well. So thank you for that. Just going to say, we do have sometimes some school leavers, for me, who may not have necessarily a credit score to begin with. So they may have gone straight into work, getting paid. But how do they build up the credit score? And what would you suggest? Do they get a credit card? And if so, what credit card would be good for them to start using to build up that credit score?
Yeah, so this is the credit score one is a really interesting point because I know that a lot of people are very worried about it and put a lot of focus and emphasis on trying to build a credit score. So I'm just going to see if I can bust a few myths here. So we have more than one credit score. We have many, but we have three main ones that we will ever see. So in the UK, there are three main credit reference agencies. We've got Experian, Equifax, and TransUnion. And they all have information about us that's given to them by the bank account provider that we use, the current account provider that we use, the insurer that we use, etc. So they've all got bits of information about us. Not always the same, because Barclays Bank, for example, might say, I'm going to tell Experian this information about you, but I'm not going to tell the other two. So each individual credit reference agency comes up with their own score on you. And they're all actually out of different amounts. So Experian's top score is 999, TransUnion's top score is 710, and Equifax's top score is 1,000. So we've already got three potential credit scores there. But this is just the view of the credit reference agency, what they think of us. When we go and apply for a product, so if we think about a credit card, for example, the person that we're actually applying to, they won't necessarily just look at your credit score. What they will also want to look at is your information in your actual credit report, because you get a credit score and then you have a report that sits alongside it that's got all the information about you. So it will say, Poppy, you have a current account with Barclays and you never go into your overdraft. For me, you have a credit card with Halifax and you're always paying late. There's more information than just the number, than just that score. So when you apply to somewhere to get a product or a service, they're looking not only at the score, the number that credit reference agency gives you, but all the information in the report as well. And then they're also looking at other things. They're also looking at other information that isn't on your credit file at all. So things that aren't on your credit file, your salary, your income, that's not actually on your credit file. So if you're applying, let's say you're applying for a loan or something, the person you're applying to, they want to know how much money you earn because they want to know that you're going to be able to repay. So yes, of course, they're going to look at the information about how you've managed credit in the past. Have you taken out credit before and paid it back on time? Or did you take out credit and you never paid it back? That's going to be really important. But they're also going to be looking at other things as well. So how much income you have. Have you had an account with them before and how did you behave with that account? So I always say this, I know that a lot of people are so focused on the credit score. It's got its place, but it's not kind of the be all and end all. There's other information that's taken into account. If you do, though, want to increase that score because you want certain behaviours, positive behaviours to show up on your credit report so people can sort of look at it and think well of you, then there are things that you can do. So you could take out a credit card. That is one way of building your credit score if, it's really important here, if you use it responsibly. So if you're going to take out a credit card, spend on it, and then miss payments, not pay things back on time, that is way worse than not having a credit card at all. So whenever you use any form of credit, it's about being responsible with it. It's about showing good behaviors, good habits, which then make somebody think, actually, I want to trust you with giving you perhaps more lending or giving you this product. If you use it badly, it's only going to be a negative. So a credit card is one way of doing that. making sure that you're on the electoral roll. So you get points, and that looks good to be on the electoral roll because it shows that you've got somewhere that you're living, you're steady, you're stable. Having you paying for things, so utilities, some utilities, so your gas, your electric, your water, sometimes they're reported in to the credit reference agencies. So if you don't have anything currently in your name, and also this mobile phone companies, mobile phones as well, if you don't have anything in your name, so if your credit score is just, if your credit report, sorry, is just blank, there's nothing on it, it's really difficult for anybody to know whether you're good with credit or bad with credit. They just don't know. So it's always worth trying to get a few things in your name, but obviously, and so hopefully they will be reported onto your credit report. But make sure that if you do that, you're then paying things on time, because having a bad, having missed payments is worse than not having any payments at all.
Thanks, Funmi. I know you've covered payslips before, but as you mentioned, some of our apprentices do have side hustles or may have a second job.
Mm-hmm.
The payslip, how would that differ to the one you shared, which was solely for the, I guess, their main job? Would they get taxed more? I know you haven't got necessarily an example of showing that, but what should they look out for? And would they get, I guess they'll have two separate payslips, but would one reflect on the other?
Yeah, so the payslip itself, in terms of the actual template, it differs depending on the company, but it should have those sort of same like main things in it. If you've got a second job, you basically have the tax code that I talked about, which kind of determines how much you can earn before you start paying tax. But if you've got two jobs, you don't get two tax codes. So for job number one, you'll have an amount that you can earn before paying tax. And then for job number two, you'll usually just pay tax on all of that income, because your tax-free bit is on one job. You're not going to get two tax-free elements. So what you might find then is that on your second job, your tax code has got two letters which say BR, which means basic rate, which says everything should be charged or everything should be taxed at the 20% basic rate of income tax, because you don't have a free bit for that second job because you've got the free personal allowance on the first job. So that's what you might see, a difference in the tax code.
Amazing. And someone's just asked, do joint accounts impact credit scores?
So having a joint account, just because you've got one, doesn't. But if you have, so let's say for example, like a joint current account, but once you have a joint account with somebody, your credit files are then linked. So, and you don't have to be married or anything like that once you've got a joint account. So it could even be if you live in a house share and you decide to open up a joint account for paying bills or paying the rent, everyone that's on that account, your credit files are now linked. So let's say one person in the house share goes a bit rogue. They run up loads and loads of credit card debt. It's on their own credit card, that's fine. But because you're linked to them, when you now go and apply for credit, the credit card company is looking at them as well because you've got that link. So, and that then can impact on your ability to then go and get credit. So I always say, be very careful who you have joint accounts with. It doesn't have to be someone you're married to or in a relationship with. It could be someone, for example, that you just happen to live with. And if you have had a joint account and that joint account is now closed, you've closed it at the bank or whatever, go into your credit file and make sure that you're no longer linked to them on your credit file. Because what happens is often the bank don't feed that back through to the credit reference agency, so it might still look like that. I know somebody who got divorced 7 years later, they were still linked to their ex-husband on their credit file because they hadn't realized. And what you can do is file something called a notice of disassociation, where effectively you say, the account's closed, and can you please delink my file from their file? So that's a great question, actually. Yeah.
Brilliant. And on that note, I think it's time to say thank you very much to everybody, especially Funmi, for running such a useful and informative session. I've certainly learned a lot. And Funmi has kindly shared her information. So if you have a question that was too sensitive for today, then please do get in touch with her separately, and she always does her best to answer them for you. As I mentioned, all the recordings and the slides would be shared with you, so please bear with us to send that through. And thank you so much, Funmi. Really enjoyed your session.
You're very welcome. Yeah, and use the QR code if you've got any questions. I think Madeline, I saw you had a couple that I didn't manage to get through too. So yeah, if you just send me a DM, then I'm happy to respond there.
Yeah, or email me and I can pass them on to Funmi. Either way, thank you very much, everybody, for giving
Great.
up your time today to join the session.
Thank you.
Have
Bye-bye.
a nice rest of the day. Bye-bye.